JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 27th of January 2022. So yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So you have to check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, and the first one I'm going to pick up here is Nikkei 225. An exciting day we had yesterday during the U.S. session, the Fed came out, let's say, more kind of proving the fact that they want to increase rates going further, and basically they sounded a little bit dovish. So yeah, the market didn't really take it nicely. The equity market didn't really take it nicely. So yeah, and it sold off. And today we saw Nikkei kind of sliding heavily to the downside. And well, I mean, this is what I talked about yesterday. I said that keep your eyes on this 26,954 territory, a break of which, would confirm another forthcoming lower low. Or sorry, I wouldn't say actually another forthcoming, but it would increase the chances of this one drifting further south. That level is the lowest point of August, and my next target then is the 26,327, which we managed to reach perfectly. So and not only that, we also managed to kind of overcome it, let me just double check something here, and I believe, yep, there we go. So the high of the 17th of November here of 2020, of course, did play out nicely as a good area of support. So this is what we managed to reach, from where we have rebounded, and the most important is that we stayed below these below this low of the, or should I say, the lowest point of December of 2020. So we stayed below it. Of course, we'll continue monitoring it during the next Asian session, which is tomorrow, or tonight actually already. So yeah, guys, for now everything's, like I said, if everything is working according to the plan, because the plan was that if we drop initially below this upside line, then yes, further declines are possible. The only thing is that one thing that I will have to admit, I didn't really expect it to drop that heavily straight away. I mean, I was hoping maybe to see a bit of a corrective move, so I have to admit that. However, the fact that the direction, it was correct. I mean, yes, it continues to slide, and especially if it fell below this lowest point of August, and that way kind of increased the chances for a further move lower, and it did so, and it did travel all the way here towards these levels. Now, of course, if the slide continues, then we have the next possible target, which is around here, the low, the 20th of November, and that's roughly around that 25,425 zone. So if you're looking for something like that, then don't get me wrong, I mean, of course, at some point we will have to see some sort of a corrective move here, given that we have kind of distanced ourselves from this from this downside line here, so maybe a bit of a retracement could be possible. However, at the moment we're not really seeing any signals for that, unless the European session and the US session today will kind of deliver that, will deliver a bit of a retracement. Then maybe, yep, Nikkei could follow suit. Yeah, for now, I would say from the technical side, if it travels back above this little hurdle right here, this 26,327, we might see a bit of a retracement here back to the upside, maybe towards even this lowest point of August. But again, for now, I mean, if it suddenly continues to drop below this 26,057 territory marked by the high of the 17th of November of 2020, then certainly my next target is the low of the 20th of November near the 25,425 zone. So keep that in mind. Shanghai Composite, very quickly on that one, and yeah, so looking at this picture here, it also sold off. It sold off heavily, and to be honest, I mean, everything's kind of working out according to the idea here as well that I discussed, that if it stays below that 208 EMA and then drops below this 3,519 zone, then, well, we could continue aiming lower. And look at how well these levels are playing out. Some of these levels are playing out. So basically, initially I was targeting this area, the lowest point of November, which we managed to reach and breach. But now, I mean, yep, we managed today, we managed to reach the lowest point of August. If I'm not mistaken, let me just double check this. No, sorry, it's not the lowest point of August. That's the low of the 20th of August of last year. And we managed to reach that hurdle. That hurdle is roughly around that 3,395 level, which we have perfectly tested. So can we see a bit of a retracement here? Again, we have moved a lot from this downside line. So in a way, we have like created a bit of space here for maybe a bit of a nice retracement. However, don't get me wrong, I mean, this downside line is just a tentative one, because if we're looking at something like that, then we have more tentative lines right here, which could play out. So again, you could keep an eye on those for now, but don't really, like I said, focus too much on them. Mainly keep an eye on some of the support and resistance levels. Now, if we continue to hold, if this level continues to hold, this 3,395 zone continues to provide support, yes, we could consider maybe a bit of a retracement here back to the upside. Back to this 3,448 zone, and then we would take it from there, of course. But of course, if the slide continues, if we stay below this 3,395 zone, then, well, my next target is the lowest point of July, near the 3,312, roughly around there area. Now, German index DAX. So yesterday, of course, it closed nicely in the positive territory. I mean, looking at this picture, it was quite. It looks quite promising. However, as you can see here, this is where the Fibonacci levels worked out perfectly. So after kind of rebounding from this territory right here this week, it pushed back down. It pushed back up here, reached the 23.6% retracement, and then eventually ended up being here on the 38.2% retracement on the Fibonacci, which is roughly around that 15,463 territory. We even closed slightly below it yesterday, but that's okay, that's fine. It's just an approximate area. The cash index, after, of course, the Fed came out yesterday, everything crashed. I mean, everything started shifting. I mean, in terms of the equities, all the equities started shifting lower, and, well, I mean, the DAX cash index was no exception. Right now, the index is trading at around 15,150 zone. So basically, we are back well below yesterday's close, and we are sitting somewhere around here, basically. So there we go. Of course, this just kind of gets closer to the overall idea that I've mentioned in the beginning of this week, that in the end of last week, that basically this could be seen as a possible double top pattern. However, if you want to get more comfortable with this idea, then we need to see a break line of the neckline first, and then we could go for some lower levels. Until then, it could still, let's say, bounce around here. It could even rebound and push higher again. So that's why be very careful at the moment, and yeah, let's see how all this is going to play out, guys. For now, keeping a close eye on this highlighted territory here, which is roughly around that psychological 15,000 mark. If that gets broken, well, I mean, this could lead to some lower levels, so keep that in mind. The S&P 500. So the S&P 500 did also a similar move here. It did close in negative territory because initially it did push higher. It was a nice move north. Even pre-market, it was pushing to the upside. So it kind of was giving hope here for the buyers. But as you can see here from the technical side, for example, what I was talking about yesterday, that if we pop back above the 4,417 territory and we stay above that, then yes, we could maybe consider a bit of a nicer retracement here to the upside. However, we didn't get that, and we only got a false breakout, and then the index kind of reversed and pushed back below the 200-day EMA and moved lower. Now, one thing for sure is that this little territory right here, this 4,330 zone, continues to somehow provide that support. That's the low of the 13th of October, and I would say like this, that if we do drop below this, then yes, further declines could be possible. The cash index is currently sitting at around 4,304 level, so that means we are already below this area. However, of course, we still have a decent amount of time until the U.S. session opens up, so it might just drift back up here. So again, be very careful for now. I mean, we are at a very interesting spot in the market, in the economy right now. So yeah, a little bit of madness is seen. I'm not saying that the market should start panicking, but again, let's see how all this is going to play out, because at the moment it's yeah, it's not looking good from the technical side, but yeah, like I said, hope dies the last. So yeah, let's keep an eye on some of the levels that I've mentioned here. So for the downside, if you're looking for something, then I would say, given that we already are on the cash index below this hurdle, then my next area of interest is this 4,279 level, which is marked by the lowest point of October. A nice good drop below that, yep, may lead to some lower levels. Initially, I'll target this area, the lowest point of July of last year, and then after that, of course, I'll go slowly to the downside, aiming for the for this area right here, the lowest point of June of 2021. So keep that in mind. Now jumping into DXY, the dollar index, yep, the dollar did move nicely to the upside, so everything is looking quite good here for DXY, and I talked about this, if you remember, that I said that if we do break this downside line and stay above it, then well, my kind of outlook, near-term outlook, becomes a little bit more positive than negative. So yeah, we have managed to move towards this area, towards this little obstacle right here, the 96.67, if I'm not mistaken. Yep, there we go. That's the high of the 20th of December of last year, and what I said as well, that my next target, my main target, is the 96.94 level right here, marked by the highest point of November, which is also near the highest point of December. So good potential target. We are very close to it, so let's keep an eye on it. And for now, I would say I'm leaning a little bit more towards the upside, but I'll get even more bullish if we do clear this barrier right here, the highest point of November. Now jumping into gold, and of course gold took a dive, and it didn't really act as a safe haven yesterday, because the safe haven was seen as the US dollar, and that's why we had this effect on gold, and gold declined. And well, I mean, what we're seeing here right now, and I'm gonna be very careful with this idea, of course. So the fact that we broke below this upside line, yes, I said before that if we stay above this upside line, we'll go higher, but if we do break it, then this could open the door towards lower levels, especially if it falls somewhere below this 18, kind of 29, 31 level area, and we did get that, and we did get that break, and now it's kind of rushing towards the downside, which is all fine according to the rules. Now, the only thing is that I'm looking at right now is let's keep a close eye on this area right here, the 1805, approximately around this area, near this 100-day EMA or the 200-day EMA, not even this upside line, because what I'm trying to lead here to is that maybe, just maybe, we could see a possible head and shoulders pattern building up later on. Again, probably I'm getting a bit ahead of myself here. So yeah, let's keep an eye on this area, let's keep an eye on this hurdle here, and if we do rebound from this 1805 zone, then yes, we might consider this maybe being a possible head and shoulders pattern, and then with the neckline around here. And maybe, let's put it this way, this is where I'm a little bit improvising and maybe trying to see where things are not there yet. Basically, if we do rebound from this area, we go higher, we test this, maybe this obstacle here, this 1830, 31, something like that, or maybe even a bit lower, depending on the 21-day EMA here as well. And then if that holds, then another slide could bring it lower, and this area right here could become quite an interesting one for a possible breakout, because we also at the same time, not only that we could break the neckline, but we could also break this upside line. But again, that's like I said, that's me getting a bit ahead of myself. Let's see if that's going to be the case, or maybe actually just going to slide heavily to the downside, break this upside line straight away, and just move low, further south. So keep that in mind, and let's see how this is going to play out. Silver, so yeah, initially it was seen as a good buy. Now it's well, seen as a good buy. But yeah, I mean, it's seen as a sell here, and the fact that we broke this upside line, we broke below this 23.43 zone. Yep, it's kind of moving lower. The same kind of similar story with as with gold. I'm keeping an eye on this area, this 22.83 zone, just to see if this is not going to end up being maybe something of a possible head and shoulders. But for now, I'm again leaning towards this area, towards this 22.83 zone, and then we'll slowly take it from there. WTI oil, of course, yes, jumped higher. The energy market, yes, I mean, of course, all the geopolitical tensions in the world right now are kind of, giving oil a bit of a boost. So yeah, however, from the technical side, I'll stick to my actually technical side right now, because what I said before, that as long as it stays in this whole territory right here, I will remain a bit on the neutral side, because this is just for me as a bit of a roller coaster ride. So I don't really like these, so I tend to wait for maybe a better kind of better confirmation. But for now, I'm not getting that. I'm seeing just a bit of like up and down here. In order for me to go higher, I need to see a push somewhere above this barrier, above this 87.90 level, and I would like to see the commodity staying above this area and staying above this this line as well. Now, for the downside, I will stick to my idea. I need to see a drop back below this downside line right here, this one taken from the high of the 25th of October, and then when previously I talked about this 84.95, oh sorry, that's 8307. When I previously talked about this 8307, we actually kind of violated it this week. It did still kind of hold, because, for example, looking at yesterday, it did still hold here from where we rebounded. So this is quite an important level to watch. But the fact that we kind of shifted a little bit here to the right, and everything is kind of, let's say, moving, and so we have to kind of adjust with time, and we have to adjust with the with the situation that we're seeing currently. So for me now, I will look at this 81.94 zone. Yes, you can still keep an eye on the 83.07 level, but below that we do have this downside line, which could still also provide a bit of support. But however, if this gets broken and then we see a drop below this 81.94 zone, this will confirm a forthcoming lower low, low. This would place the commodity below the 21-day EMA, and potentially, yep, more sellers could join in. So basically, kind of more and more confirmation could be seen around here rather than around here. So, but again, that's in case we get lower. But at the moment, it's testing the upper levels here. So, yep, let's see if we can, if this commodity will remain in this area, or will it go even higher. XRP USD, which is Ripple, so I'm just not going to spend too much time on this one, but it's just kind of moving a little bit sideways right now. It's kind of consolidating, I would say, but still overall we're below this downside line here, taken from the high of the 10th of November, so kind of everything's leaning a little bit more towards the downside. But what I'll say here is I still need to see that confirmation break below the 0.5750 in order to go for lower levels. And yep, and if that gets broken again, we see the body of the daily candle staying below that area, then of course, yes, we will go for lower levels. My next target is this one, the lowest point of June of 2021, and which is also near the lowest point of July of 2021. So that's roughly around the 0.5125 level. AUD CAD. So jumping into a few pairs. Now, okay. Here, this is what I talked about yesterday when I covered this pair, and I said that be very careful. Although we broke this downside line, still I would need to see a confirmation push above this 0.9072 level in order to go for some higher levels. Well, we didn't get that, so we remain neutral. However, given that oil increased, or the price of oil increased, this was having a nice positive effect on the Canadian dollar. However, there's always a however, but in this scenario, in AUD CAD scenario, we have also AUD, which is kind of a risk related pair pair currency, yep, we're seeing that the negative effect of the equity world is kind of spilling into AUD, and that's the result we're getting here. And we have stronger oil and a weaker equity market, and the AUD CAD is drifting nicely to the downside here. However, I would still prefer to see a break of this hurdle, this 0.8972 level, in order to go for lower levels, because such a move here would confirm a forthcoming lower low. USD CAD, boom, there we go. We have an opposite effect here. So even though oil increased, yes, it's still not enough, because the dollar, US dollar was the stronger one, and boom, there we go. We broke it, and what I said to you yesterday, that keep your eyes on this 1.2570 zone. I need to see a clear, strong drop below this, but instead, yeah, we did get just a false breakout here, and instead we look at this. I mean, we reversed higher, we broke the downside line, so kind of everything's leaning a little bit more towards the upside right now. So let's keep an eye on this. As long as it stays above this downside line, yes, I'll continue aiming higher. My next target will be this 1.2814 level. Quick update on US dollar against the Turkish Lira. So yep, finally we got out of that squeeze. We pushed higher. We pushed above this this triangle, upper side of the triangle pattern. The only thing is that we are stuck here. We are stuck still. It's not really a significant move here, so I would say if you're looking for something maybe a little bit reassuring, then wait for a push above the 13.93 level, somewhere around here. For the downside, 13.1363, approximately around here, could do the trick for a few more sellers, or even the 13.13 level. That could be an easier way of monitoring it. USD CHF, so boom, there we go, beautiful rebound, tested this downside line, and there we go. So this is what I said to you previously, that wait for that confirmation break here through this lower side of the range, because currently we're still in a somewhat of a range. Yeah, we pushed higher, we broke this downside line, and now it seems that the pair wants to continue moving higher. However, keep your eyes on this trading today. Of course, if suddenly CHF will be seen as a safe haven, then maybe it might outweigh the US dollar, and yep, if let's say the equities continue to slide lower, so be very careful, and then we could see basically this this daily candle dropping back below this downside line, and we will have ourselves a nice little false breakout. So don't rush into this yet. I would say if you're looking for, if you are, let's say, confident, then yeah, you can go in. However, have your stop losses in place, guys, and at these moments, at these situations, kind of don't risk too much, because these are a little bit tricky situations. So don't, like I said, do your money management correctly, and everything will be fine. But always keep in mind that, for example, here, I mean, we're just at the beginning of the day, so we don't really know exactly how it's going to go. So it might actually also reverse, back down again. So GBP USD, very quickly on this, just a quick update, to be honest. It didn't rebound from this downside line. It instead, what I said, that if it falls below the 1.3419 zone, then we'll go for lower levels. So far, we're aiming for the 1.3375 level, and then we'll just take it from there. It's just a kind of a, say, maybe not the most exciting, but I mean, if you're able to squeeze something out of it, guys, I mean, everything can be exciting. So yeah, let's see how this is going to play out. As long as it stays below this downside line, I'll just continue aiming lower. Now, the other story here is GBP Aussie, and here we have a very weak Australian dollar, which is suffering. And now looking at this, I mean, it's kind of it's still positive, and we are still kind of flirting with some of these levels right here. You can see the reason why I'm marking this one, the high of the 7th of January, is because we had these overshoots recently, but we didn't really get a kind of we didn't have the daily candle, the body of the daily candle, remaining above this area, so this 1.8980 level. So if we eventually get that, if we do see the pair staying above that level, then my next target is the highest point of August near the 1.9154 level. For the downside, now, of course, initially I would need to see this one dropping all the way back below the 21-day EMA, but then we'll have this upside line to get rid of. But if that gets cleared, then yes, we'll go for some lower levels. One of the levels that you can keep an eye on here is the 1.8761 here, marked by the low of the 20th of January. EURUSD. Now, I haven't looked at this one for quite a while, but this one's quite interesting because, as you can see, it's kind of it's a mess sometimes, to be honest. EURUSD is not the most exciting one because it just it's kind of close to Euro GBP. I mean, that pair does what it wants to do, but EURUSD is kind of sometimes similar, but again, sometimes it does allow itself to be predicted. So here, for example, I have a downside line taken from the high of the 20th of December, so I need to see a clear break through that downside line in order to go for some higher levels. I'll keep an eye on this 1.4320 zone as well, just in case, just for that extra confirmation, and then slowly we'll go higher, but we'll have a tight stop loss, as always, on EURUSD. If this is not looking bearish, then I don't know what. So we are approaching the lowest point of November right now, let me just quickly, 1.1186. So we're getting closer to that. And what I said to you previously, guys, that if we drop and stay below this 1.13 zone, then, well, I mean, further declines could be possible. And, well, that's where we're getting right now. We're keeping an eye on this lowest point of November, and if that gets cleared, well, I mean, guys, we are starting then to look further south, and maybe even going towards this little inside swing high initially, which is roughly around that 1.1019 zone, and then yeah, we will take it from there. For now, it's not looking good here for the Euro USD. So guys, that's it for this session. I really hope you found it useful. Thank you very much for joining in and watching this until the end. I'll really appreciate your views, guys. If you want to catch me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.